Hey guys, today's video is about a stock that has delivered an incredible 17% compound annual return since 2003. If you had invested $10,000 in this stock by then, today you would have almost $170,000, $158,000 just from interest. In this video I'm gonna talk about everything you need to know in order to decide whether you want to buy shares of this company, starting by the company's history, what kind of products they make, and I'm also gonna go through their financial results and talk about the opportunities they might have in the future so that they can continue to grow at this pace. I'm quite sure that the company we're gonna talk about today fits under the category that Peter Lynch classifies as the perfect stock. If you're already an investor, I'm sure you're aware of who Peter Lynch is. He's one of the greatest investors of our time and the writer of bestsellers like One Up on Wall Street. For Mr. Lynch, among other things, the perfect company makes things that people need to keep buying, buys back its own shares, and most important of all, does something that people consider to be boring. And the company we're about to talk is quite a match. So let's start out. I'm talking about the Toro Company, a leading worldwide provider of innovative solutions for the outdoor environment, including turf and landscape maintenance, snow and ice management, underground utility construction, and irrigation and outdoor lighting solutions. Toro is a century-old business. The company was established as the Toro Motor Company in 1914 to build tractor engines for the Bull Tractor Company. They went on creating the first mechanized fairway mower for the golf course industry, as well as irrigation solutions, and although they had to cease production during World War II, in the following years they continued their history of innovation by starting the production of snowblowers, underground irrigation systems, and golf course irrigation. They also have a very strong history of inorganic growth. In 1986, they acquired the Wheel Horse Products division of American Motors Corporation, which manufactured a wide range of lawn and garden tractors as well as riding lawn mowers. Acquisitions continued with the purchase of Lawn Boy in 1989. In the 90s, Kendrick Melrose, which was then the company's CEO, changed the company's strategy, shifting its focus to professional maintenance markets such as golf courses, sports fields, and commercial properties. The company also grew by acquiring James Hardie Irrigation in 1996, Exmark Manufacturing in 1997, Hayter in 2005, Rainmaster Irrigation Systems, and TurfGuard Wireless Monitoring Technology in 2007. This shift to professional markets like golf courses yielded higher margins and offered more protection from the uncertainty of weather and economic conditions that are more present in the highly competitive residential market segment. In the years 2000, they continued to expand with new products for professional snow and ice management equipment, underground construction industry, and professional turf equipment. Today, they have manufacturing locations in 9 countries worldwide and a strong network of professional distributors and dealers in more than 125 countries, offering a wide range of products across a family of global brands. The company's products today are marketed under those several brands, like the main one, which is Toro, with irrigation systems and supplies, professional and consumer mowers, snow and leaf blowers, Boss Snowblow for snow and ice removal, Exmark for commercial mowers, Hayter in the UK for consumer and professional mowers, Irritrol manufacturing irrigation systems for residential and commercial landscapes, Lawn Boy for consumer mowers, Ditch Witch for underground utility construction, Hammerhead also for the underground construction market, Parrot in Germany for the irrigation of sports and agricultural fields, Pope in Australia providing garden maintenance solutions, Radius, which is a tooling manufacturer, Trancor for hard rock trenching, and Unique Lighting for low voltage landscape lighting. 80% of the company's products are sold in the US and 20% internationally, with professional equipment accounting for 75% of revenue. Irrigation equipment is a small part of total revenue with 12%. The company's CEO is Mr. Richard Olson, who is also the president and chairman of the board and has been in the company for a very long time, since 1986. The company has a market cap of over $10 billion and more than 10,000 employees. They trade at a price-to-earnings ratio of 25, which I think is not really that much for a company that has been growing like they grow. They have a 35% gross margin, which again is quite amazing for a business that is a product manufacturer, not a service provider, which would be quite more scalable. And they have been profitable for a very long time with a net margin of 11% by the time I'm recording this video. They also have few debts and a very low debt to equity ratio of 0.6 and are a good dividend paying company with a yield of 1.1% and a payout ratio of 26%, which means that they distribute to shareholders 26% of all the profits. Here we can see that they have been distributing dividends since 1972 and that since 2003 that distribution started to go at a much more rapid pace, and since then the quarterly dividends distributed has been growing at a 23% compound rate each year. It went from 2 cents a share in 2003 to 26 cents a share in 2020. With that, dividends have been paid for 150 consecutive quarters, or 37 and a half years. They also generate value to shareholders by buying back shares at a compound annual rate of 4% since 2004, and with that, the outstanding shares already adjusted for splits went from 200 million to a little more than 100 million shares in 2020. And we can also see here that the management still have 6 million remaining shares to buy back in the following years in their buyback program. In the past 5 years, their revenue has grown steadily at a compound annual rate of 9%, operating income has grown at 6.3%, and net income at 9.3%, and they are still growing. Net sales rose 18% from 2020, adjusted gross profit rose 17%, and operating earnings went up more than 27%, leaving the company with net adjusted earnings of 333 million, a 28% increase from the previous year. When it comes to the expenses, they are pretty much under control. Sales, general, and administrative expenses have been growing 9% each year at a very similar pace to the revenue growth, so no problem here. And we can see that they spend a lot of money in research and engineering, around 3.5% of net sales, and all that resulted on more than 2,000 patents owned by the company today, which is critical for them because they depend a lot on innovation and new products. So, to make a long story short, we're talking about a company that is century old, with a proven track record, has been profitable for decades, has a very strong balance sheet with low debt, still has room to grow internationally because, as we saw, only 20% of revenue comes from outside of the US, and has the opportunity to grow into sectors such as telecom, utilities, and infrastructure. When it comes to the weaknesses and threats for this company, in my opinion, the biggest challenge that they will have is their ability to keep innovating. If they can keep innovating, creating new products and entering into new markets, I'm quite sure they will do fine, and I think they still have lots of opportunities ahead of them to keep growing. So, what do you think about the Toro company? Can they continue to beat the S&P 500? Please let me know your thoughts in the comment section below. I hope you guys enjoyed this video. Please don't forget to smash the like button and subscribe to the channel for videos of some of the greatest companies to invest. See you next time.